How's it going, everyone? It's Sam. I want to talk to you about a penny stock that I plan on doubling my position, or right around doubling. We'll see how the price action is on the stock, but I'm filming this on Monday. I've done a lot more research since last week on the stock. I want to explain what I've learned, kind of why I'm so much more bullish even now than I was originally, and some of my updated thoughts and opinions on this stock. So if you guys like this, please leave a thumbs up. I really appreciate it. Please hit the subscribe button if you haven't done that already. It helps out the channel a lot. And if you want some free stocks down below, you can check out the link to WeBull. If you deposit $100, you can get some free money. You can use a new trading platform, and it pretty much pays for a night out with my girlfriend and myself. So I really appreciate that. We ate some dinner the other night that would be almost perfectly covered by a sign up from WeBull, some burrito. So I really appreciate that. And then if you want to see what I'm buying in real time and get in on the Patreon, you can definitely check that out in the link below. I've been releasing a few videos, not every single one by any means, but a couple of videos to them a little bit early. So if you want to sign up for that, you can do that. And if you want to, share that to someone that that might be interested, I really appreciate that too. Most people make up their money in the first week or first couple days on that platform. So I really appreciate that, and let's get into it. So the company that we're looking at today is SENS. Now, I want to cover some updated news, something that came out that I think will drop the price, but I like it long term. I think it's really good for the company. I'll explain what that is. I'll compare it to the competition because I did not do a very good job of explaining that in my last video, and then just give you some updated thoughts and opinions on the stock and what I'll be doing with it towards the end. So I definitely stay through to the end because there's going to be a lot more information, I think, than even the last video. So this company is a continuous glucose monitoring company. Now, this is interesting. It's moved up a lot just over the last couple days. It was just a 43-cent stock in December. Now it's moved up almost 300%. Now I bought in at about $1.70 or so. So we're just about even as of now at the time of this recording. Now I actually plan on holding this for the long term. I know we've been doing some swing trades on different penny stocks recently, but I plan on holding this one for a while. And this is a pretty small company, but I'll explain why I'm so bullish on it here in a second. And actually, I'll put up the video on the end screen, the first video on this, because that will give you a little bit more background on Senseonics. And this is more like an update video almost. So the news that came out over the weekend is that they announced a $50 million registered direct offering. Now, this is pretty interesting for a couple reasons. First of all, they needed the cash. They burned through a lot of cash, and they honestly they didn't have that much set up. So they just got a credit line recently to shore up some extra capital. And that was one of my concerns with the company. One was the increase in revenue because they actually had decreased through 2020. And I'll explain why that is in a second. And then also their cash. So they sold via direct offering 40 million shares at $1.25. Now, I like this for several reasons. First of all, like I said, they needed the cash. Second of all, this just recently passed $1. If you look here, even Thursday, towards the end of the market, we were not at $1.25. So we've literally been on the market for one day when it's past this dollar amount, and a big institution is already willing to invest. Now, in my previous video, I believe I went over some institutions that are already in this stock, but I think that that's a really good sign that someone's willing to buy about 10%, over 10% of the company for $1.25. Now, I think that also is good, not only because they need cash, not only because a big institution's willing to buy, but also because it could possibly drop down the price. We've seen that with a lot of other penny stocks. When they register a direct offering, people sell out, the share price goes down, and we see it drop off pretty significantly. Now, I could see that. I could see a pullback to maybe 130, 140, something like that. And like I said in the beginning, I plan on buying more, so I think that's going to be a nice buy-in price. Now, just straight off the bat, they needed cash. They said in September 30, 2020, that they had about $26.4 million in cash, but they burned through a lot of money. So in this quarter, in the third quarter, they had a net loss of $23.4 million. They go through a lot of cash, like I said. And I also talked about how they didn't have much revenue. So that was my other concern. And I kind of cleared that up because I don't think I did a good job of explaining. The reason that they didn't have good revenue was because they had someone pretty much call a loan that they had for, I believe it was right around $50 million, and that dropped off their revenue very quickly. So that was something that they didn't want to shutter the company or like completely bankrupt the company, so they pulled back. They helped existing clients, but they need to find some other money. So that's kind of where we're at now. They found some other money, and now they're going to continue to try to grow. Now, they have their 180-day product at the FDA now, trying to get FDA approved. They already have their 90-day product. So again, usually with glucose monitoring systems, and I'll show some of the competitors, they last for 10 days or 2 weeks. This one is 90 days already. It's approved by the FDA. They're trying to get the 180-day approval. They're eventually going to try to get a 365-day approval, which is a game changer. Now, they're expecting revenue to continue to increase because they have very strong sales. They're facilitating some of their European sales over to one of their partners. And you can kind of see that here. Essentia will be continuing sales in Europe. So they explain that a little bit more down here, but they have really strong European sales. Now, just looking at this again, this is kind of where they explain revenue was reduced due to the temporary suspension of commercial operations in the U.S. after Solar Capital Loan pulled their money, essentially. So again, that kind of explains why that happened. Now, this is kind of a timeline of the approvals for the FDA. Now, this was pushed back, like we said. This is something to be a potential catalyst moving forward. A lot of this is due to the Rona, but I'm not sure I really hit on how important this Essentia partnership was last video, because this is huge. This is, I believe, the largest diabetes care business in the world, and they work in so many different countries, have so many sales, and they are taking over some of their operations. I believe this is the only continuous glucose monitoring product that they work with or company that they work with. So the fact that they're willing to put their name behind them and even take over some of their sales in other countries and other continents, I think is huge. I think that this kind of protects us too on the downside, because while they hadn't had a lot of cash, now they do. But I think Essentia is kind of going to be like a big brother to them and kind of pull them along if they need help. Now, just comparing some of the different products, I actually found this as a research article, a 3-way accuracy comparison of Dexcom G5, and this is G5, not the G6, Libre Pro, and the Senseonics SenS system. Now, I'll show you kind of the price breakdown and some other metrics here in a second, but what I found was the SenS achieved the lowest nominal MARD, and I'll explain what MARD is in a second, followed by Dexcom, followed by Libre Pro. So this was done just in 2020, November 2020. So again, they don't have the G6 on here, but that's the newest product, I believe. If we look at MARD, it's the mean absolute relative difference. Now, this is commonly used to detect the performance of these continuous glucose monitoring systems. And in general, a lower MARD indicates higher accuracy. So again, just going back, they're saying that the SenS system achieved the highest accuracy of these products. And I think that's definitely a good thing. Now, just looking at Dexcom and the Libre versus SenS. SenS is 90 days. Dexcom, 10 days, up to 10 days. If we look at Libre, it's also 10 days. So then if we just take a look at all these different products in terms of price, we have the Libre, which is the cheapest. It's a 10-day sensor for about $36 for each 10-day sensor, so about $110 or so a month. And then you have the initial purchase of $70. And then you have the Dexcom, which is about $300 per month. And then you have the SenS system, which is about $300 for insertion and then $300 for removal and reinsertion. So I think that that's probably, well, that one is just about as cheap as the Libre when you consider the initial amount is about $100, it looks like, and then it's about $300 every 90 days. So it's about $400 or so. This one is about $330, and then this one is about $900, and that's for a 3-month basis or every 90 days. You can definitely check out more information on this, and If you want to check out my video on it, the first video, I'll put it up on the end screen. But again, how I'm kind of planning on playing this is the market opens around 9:30 a.m. my time. So I think we'll see probably a dump off in the morning, maybe some more people buying in, maybe in pre-market, or maybe it will be after the market closes because more people will dump off. I think that we've seen pretty consistent dumps when there have been share offerings, but again, I think this is a really good thing for the company. So I'll have to monitor during pre-market to see, okay, the initial dump happens. Let's see if it starts to go up. And if it starts going up, I might try to buy in pretty early. If we start to see it go up, I'll probably buy in on the way up. If we continue to see it kind of trade sideways or continue to go lower, I'll hold out. I'll probably try to jump in around 140, 145 if it's at that price. Otherwise, I think we might be able to get lower, but we'll just have to see when the market opens because it's hard to tell in these penny stocks because I think a lot of people that really realize what's happening here will be excited, but we'll see how the market reacts. Definitely just be cautious because it is still a penny stock. It's a risky play. So please, I'm not a financial advisor, but don't put money that you can't stand to lose into these penny stocks. I think eventually we'll see some pullback. And, I think Dead Inside kind of explained this. There will be a time where I pick out a stock that doesn't do well, and I just don't want you guys to hold me accountable because really I'm just trying to get out the information to you and tell you what I'm doing. So tell you what I see and then tell you what I'm doing, and then it's your job to then finally take that information, do some more research, back up your own thoughts on it, and then make a purchase or not make a purchase. So I hope you guys see that. If you guys want to see that video on Senseonics, the first video I had, I'll put it up here. Thank you guys so much. I really appreciate it. And again, if you want those free stocks or you want to get on the Patreon and maybe get this a little bit earlier, you can check out the link below. And I'll see you in this video. Bye.